Welcome to another episode of Mutual Growth, a podcast by Penn Community Bank. I'm your host, Aaron Clark. After the show is over, be sure to check out the show notes and links to resources at penncommunitybank.com/podcast. All right, Ellen and Nicole, welcome to the show.
Thank you.
Nice to be here.
We're excited to have you on another 2-for-1 episode. Always have been fun in the past. I'm excited to talk to both of you about our commercial banking, commercial lending capabilities. But before we dive into the good stuff, let's begin with introductions. And Ellen, since you're on my screen, we'll begin with you. Can you just kind of give us a background on yourself and how you came to be at Penn Community Bank and what it's like being on our commercial banking team?
I'm Ellen Dodell, and I'm a relationship manager at Penn Community Bank in commercial lending. I've been with the bank for a little over 12 years, and I have 35 plus years banking experience in commercial lending at large institutions as well as Penn Community. I made the decision to come to a smaller bank. It was just a nice opportunity, and I felt I could gain additional experience that you just don't get at a larger institution.
Awesome. Nicole.
Great. Well, thanks again, Aaron, for having us today. I, like Ellen, and also a relationship manager in our commercial banking group. I have over 20 years of experience. Banking was my first job out of college, and I never left. I've been with the bank. I'm coming up on my 7-year anniversary. It's been a great ride so far, having so much fun. It's really just a great place to work. So I, as well as banking, I have 2 very active children, and I am very much involved in the community. I'm involved in youth sports. I'm a co-commissioner for one of our township local youth sports lacrosse programs. Coach my daughter in lacrosse, love watching her play, and also golf with my son a lot. So very happy to be here.
Busy. Well, you both mentioned, before we begin, Ellen specifically, your time with the bank, or specifically coming to Penn Community Bank and enjoying the kind of the culture and the opportunity that it provides. Just before you dive into kind of the capabilities, which I think listeners will find are comparable to bigger institutions, what is it about a smaller bank or a Penn Community Bank that you enjoy working at from a culture or a teamwork standpoint?
So I'll go, I'll answer this, Aaron. One of the biggest differences with working at Penn Community Bank is all of our decisions are made locally. We are primarily based in Bucks County. All of our employees, live, work, and are immersed in the communities in which we operate from. And that's really the biggest difference between, with doing business with the Penn Community Bank. You have access to local leadership. The executives in our company out to meet with local business owners to find out what's going on. So that's really the biggest difference. It's local decision making. The people that are making the decisions as to whether or not to extend credit to a business live and work in the community. So they have a very good pulse and a very good handle on the local economy.
And I would just add that we have a really good team, both credit and on the lending side. We collaborate well, and there's a lot of teamwork. There's discussion, support with loan structure, whatever it may be, but it's very collaborative and supportive type culture.
Awesome.
Yeah,
you mentioned
great point.
You mentioned credit, and I know we're going to get there because that's more important now than ever, it seems, for a lot of businesses looking at funding options. Before we get there, for the layperson, if there's someone listening in here who might not be familiar, Ellen, can you just kind of provide an overview of what a commercial bank or a commercial lender is, and kind of what the work you do with businesses and how you help them meet their financial needs?
Sure. Well, a commercial lender really has a multitude of responsibilities. Our primary goal really is to facilitate loans and other bank service products and services, so that we understand your business, and we help to give you the right tools from a lending perspective and a depository perspective, to be able to operate efficiently. I see myself as a advisor to the business, responsible to really understand what makes it work. Everything from their customer base to their how their operating margins are, to how they generate a profit. And we're constantly assessing a customer's creditworthiness, so that we're following and monitoring that relationship as we go through time. And when issues arise, voicing that up to senior management at the bank to make sure that everyone understands what's happening.
I can follow up to that as well. Ellen is completely right. It's a multitude of things that we do. No day is like the day before. That's what makes this job really exciting and fun. You could be dealing with two businesses in the same type of industry, and they have completely different needs and do things completely different. So we are constantly figuring out solutions for our clients that fit their needs, which is really the fun part. And I think the other important thing to know about being a relationship manager is we take our client from the first step, from determining hey, I have a need and I need a loan to do this, all the way to closing, but then we manage that relationship within the bank. So we do not go away once a deal is closed. We remain their point of contact for as long as they're dealing with Penn Community Bank. So that's when really the relationship starts, when the deal closes and we bring them into the bank. It's a huge part of our job, maintaining, sustaining our credit portfolio is another key piece of being a relationship manager.
Yeah, so it seems interesting. You mentioned, Nicole, kind of working with, two different businesses who might have totally different needs and kind of the puzzle pieces that need to fall in place there. Obviously, lending can cover anything for a business, right? It could go from real estate to working capital, anything in between. Can you just kind of, from a high level, give us, an overview of some of those different loan options and when or what kind of businesses might be looking for what, how you kind of consider those in that relationship process?
There are three main products that I would say that we as relationship managers deal with primarily with our clients. And those are working capital lines of credit. And these loans are for borrowers that are, it allows a borrower to borrow up to a certain amount. They might not need all the money then, but they have access to money when they need it. It allows more flexibility. It allows a borrower to just pay interest only on the amount that is borrowed. So working capital line of credit is something that we do very often in our world. We also do term loans. So term loans are great for businesses that are looking to, maybe they have debt that they want to refinance. If they have a piece of equipment, a commercial term loan, you are given the money, a lump sum right up front at closing, and you're paying it back a certain amount every month for a particular term. The other loan that we do a lot of and see a lot of in our world is commercial real estate. We finance owner-occupied commercial real estate, and this is for businesses that are looking to buy the building that they operate their business in. So those are sort of three common loans we're doing in our group. Obviously, there are other loan products out there, but working capital lines of credit, equipment or commercial term loans, primarily to finance equipment, and owner-occupied commercial real estate is what we see the most of here.
Awesome. I think, Ellen, going back to your response to the previous question, when you talked about the value of that relationship process and really taking the time to go through a customer or a client's financial history, their credit worthiness, there's obviously a lot that goes into that, but what criteria do you typically consider when you're sitting down, you're across the table from a potential customer, when you're assessing their credit worthiness, or they're applying for one of the type of loan products that Nicole just described?
Well, we collect a number of things from the customer regarding their financial condition. So we work with either their audited or reviewed or compiled statements, tax returns. We do look at the creditworthiness of the owners of the business as well. So we collect their tax returns and personal financial statement. We also really talk to them about where they see the company going, what their projected growth plans are, and what it is they're going to need, whether it be a line of credit, or if they're acquiring another company, or they're looking to buy out, an owner of the company. Other things we can also do with term loans. We try to gather all of the financial information that we need, and we have a way of analyzing that and determining if the cash flow is sufficient enough to support what they're looking to do.
Aaron, I can also piggyback on this as well. I think to summarize what Ellen said, there's really kind of 5 key components that we look at when we're looking to extend credit to a business. The first is cash flow. Does this business have the ability? The second is character. Who is this person? Who are these owners? What's their background? What's their history like? Ellen also said the credit worthiness of our borrowers. Having good credit is key. I can't stress that enough. Owning a business, you want to make sure that you are you're constantly looking at your credit report and making sure that everything's accurate and up to date. Collateral is another thing that we look at on all of our loans. Our loans, for the most part, are secured by collateral. So what is the collateral that you're offering up for this particular loan? And the last is, the conditions. What are the economic conditions that could affect your business? This is something, especially given the world as it is today, that we really focus on. Is there changes in the market that could negatively or positively affect your business? Is there legislation that could be passed that could do the same? So all of these, we call it, again, the 5 C's of credit. One is not more important than the other, but we look at all of them to make a decision as to whether or not we're going to extend credit to a business.
Yeah, I'd imagine as a local business owner or an operator, someone seeking this kind of lending that you're describing, it would be a net positive to have a institution where there is this relationship process being formed while you're going through those 5 C's, because I can see that maybe a larger institution or a little more of an impersonal process elsewhere, where if one of those isn't A1A, you're just kind of off the list. I'd imagine, Ellen and Nicole, both of you probably have stories of working with customers to kind of either strengthen their position to get the financing they need, or even working with our team internally to make those numbers work to really help grow local businesses. So I think we'll touch on it a little later, but certainly a net benefit, since we've been talking about the value of relationships. I do want to step back, Nicole, with you, because we talked about lending products, and one of them that I know probably a number of listeners are familiar with from other institutions, and certainly from the national level, are SBA loans, or Small Business Administration loans. Obviously a popular choice for small businesses particularly. Can you touch on the bank's involvement with the SBA loan program, what the advantages are, who should be looking at them?
Yeah, so the bank, at Penn Community Bank, we process SBA loans for borrowers, and SBA loans are a great solution for businesses. When businesses want to grow or to expand, the SBA is a product that we look to help in these particular situations. SBA loans allow borrowers to put down less cash than conventional loans, And it also enables the bank to offer, in some cases, longer terms than we would on the conventional side. So SBA is also a great solution. Earlier, I had mentioned that collateral is one of the things that we look at when extending credit to a business. A business, in some cases, might not have enough collateral. That's where we would use the SBA to get them the financing that they need. So the SBA is it is a process. We make sure, we are holding our clients' hands from start to finish. There is a lot of, paperwork that's involved. It's a government-sponsored lending program. So, the bank needs to make sure that we are gathering all the required information from, that the government requests of us. So we process SBA loans here. We do a lot of them. And it's a great solution for a business, that is looking to do these things, grow, expand. Maybe they want to, like Ellen had said earlier, buy out a partner. They want to buy a piece of equipment that's going to double their revenue. So instances like that, we would look to get a SBA guaranteed loan to make that financing a reality to our clients.
For listeners who have tuned in before, when we have Dorothy Jaworski on to give her economic update, we always kind of touch on, well, where are we at in economic strength? Is it a recession? Are we approaching a recession? Are we leaving one? So obviously economic conditions are on top of mind for everyone, both inside the bank and outside. But Ellen, for customers who are looking at the economic picture, the lay of the land out there, they know that they have something that they want to do with their business, but obviously they can't control everything. Kind of how do economic conditions factor into your review of lending options or the opportunities to work with the customer? Is that reviewing their ability to withstand something? Is it just all a numbers game? Can you talk about what that looks like during the loan application process?
Sure. It's really important right up front to get a really thorough understanding of a company's overall operation, everything from their sales cycle, what products they offer, how they make money on those products, who their suppliers are, what the makeup of their customer base is, understanding their manufacturing operation and what goes into making a sale, and how, basically how they generate a profit. Identifying the factors that really could influence their success. If it's a niche business, something small like a change in technology or change in their suppliers could drastically affect how they're able to do business in the future. Competitors, another competitor coming in. So it's really important to really, focus on the big picture, but also understand the details of what their business is all about. And I would add to that, understanding how well capitalized they are, how much capital they have to support the business, the strength of the balance sheet. Obviously, a stronger balance sheet, they can withstand an economic downturn, or would be able to more easily finance expansion if that, things were going in that direction. Those are kind of some of the things, just looking at the overall picture, but understanding those details that go into the finer details of their business operation.
Got it. And I think, Nicole, you had mentioned collateral also being a part of that kind of initial process and reviewing. Can you explain just at a high level what that is and how that kind of plays out, or what you're looking for as you go through that loan application and the term process?
Sure. So obviously if we have a client that's buying real estate, that would be the collateral. We would file a mortgage on that property, and we will finance up to a certain amount and then require the borrower to put in the rest of the money, or that's their equity, into the transaction. We have a client that we're working with that is financing equipment. That equipment is the bank collateral. We file a lien against that specific piece of collateral. When it comes to borrowers that are seeking a working capital line of credit, so in this case, they don't have real estate. Well, maybe they do have real estate, but they might not have real estate. They might not have equipment that we can take. We look to other assets within the business. And these assets could be their accounts receivable. It could be their inventory. So these are things that we take as collateral for a loan. So it's pretty much, any asset within the business can be used as collateral, but they're mostly primarily real estate, equipment, accounts receivable, and inventory are really the four main collateral pieces that we would take. Did I miss anything, Ellen?
No, not at all. I, sometimes when there is not enough collateral to support, we do look to other possible outside sources, maybe additional real estate, that an owner may have to be able to pledge. It just helps complete the picture.
Yes.
So obviously a lot goes into the process. For those of our listeners who have not been through that process before, their heads might be swimming and trying to keep up with kind of all of these pieces. But what would, for a first-time borrower, is there a single piece of that process, or are those things that are needed to begin it that is the most important? Or is there a piece of advice that you give to someone seeking a first-time commercial loan? We'll begin with
for businesses that don't know where to start, I would start with asking a trusted advisor, somebody that maybe you have a good friend who owns a business, and just ask them, hey, do you have someone at a bank, someone like me, someone like Ellen, that I could talk to? This just happened to me yesterday. I have a person that I work with referred a new client to me, and they called me yesterday and said, I don't know where to start. Where do we start? They're looking at buying a building, and we had a conversation, and I explained to them, here's what you're going to have to do. Here's what you need to ask for. So it's really just starting a conversation with a relationship manager like myself, like Ellen, at a bank, and get that referral from somebody that you know and trust. Your best friend might work with somebody at a bank. So just start the conversation, start having the conversation. We are going to take your call. One of our responsibilities is business development. We have to bring business into the bank. So we will talk to anyone and everybody about this process and what businesses need to do to move forward.
I would add, also take time to talk to a couple different banks and commercial lenders. Get a feel for the culture of that bank, and understand what the organization has, and are they able to really help you with what you need or what you want. Penn Community is a great place to start. So if you'd like to schedule an appointment with us, that would be great. Establishing trust is a never-ending effort, and one that you can never take for granted. I've learned to really listen carefully to my customers and respond. Take action toward what they're asking and what their needs are. And even if I can't deliver an answer right away, or soon thereafter, keep them in the loop, keep the communication open. So establishing trust is, listening, responding, and open communication. It's critical.
Ellen, that's such a great point, because it's so important in in most of the deals that we do, we are financing probably one of the single most important life events for these business owners. So it's important that you meet with someone, that you deal with someone that you're comfortable with, that you like. That is so important to this whole process. You know, get a feel. It's totally right. Talk to a couple different banks. You might get a different feeling and say, well, I think I want to work with this person because immediately, I don't know, had trust with them or whatever it is.
And I think too, you know, getting an understanding of how the bank handles things when things are good and when things aren't so good. So, because a lot of banks, you know, banks all handle things differently when things take a downturn. So that's a really important aspect to investigate when talking to a bank.
Another thing that I would imagine is important as part of that consideration process, and we had mentioned it way back at the beginning of our discussion, is kind of the synergies or the relationship between, you know, the relationship manager, the lender, and those back office support credit team members who are really advancing the business's a big deal, as Nicole said, in the life of that individual and their company, advancing it through the process. Can either of you kind of touch on what that relationship between credit and lender, or credit and back office here is at Penn Community Bank?
Like Ellen had said before, we're very, very lucky here that we have a very collaborative culture between credit, relationship managers, and our back office. And I think that comes from, we have a mutual trust and respect for one another. But it's very important that we all know and understand what each job entails. We all have a common goal, and our common goal here at the bank is to book commercial loans. That's the main goal within our groups. And how are we all going to do that successfully, you know, together? We are in constant communication with each department. So if, you know, a lot of times our credit department, they're coming out and meeting the clients, you know, along with myself or with Ellen. So that sort of can speed up the process in some ways. But with our back office, again, we as relationship managers understand that our back office support needs a certain amount of time in order to produce the loan documents or you know, the other things that they need to do. So I think it's just being in constant communication with one another and really just having a mutual trust, respect for each other, that we all have a common goal. We all want to get loans booked, and we have to you know, trust the process, so to speak, that it will get done.
And we're also a very, you know, we're a smaller organization. We know each other. So we know the heads of departments. We know who we need to call to get things done and to get answers and to get our customer to the right person for whatever solution we may be seeking,
that is a huge benefit. It's a huge benefit. Yeah. Yes, absolutely. To dealing with a smaller bank like Penn Community Bank, is we can get stuff done. I can walk down the hall and talk to, you know, the head of our operations and resolve an issue.
Yeah.
So obviously that's a differentiator, right? But between, as you're saying, a Penn Community Bank sized organization and maybe a larger competitor. But I know there's a lot of other things happening in the commercial lending landscape these days that might also impact some of the decisions or options even available to businesses out there looking for financing. Ellen, can you just kind of give us from a high level kind of what you're seeing? What are other institutions doing? Is there a glut of opportunities, or is this kind of drying up a little bit?
Banks have definitely pulled back with this environment of rising interest rates. And I'm seeing customers, borrowers, really thinking twice before, you know, borrowing a significant amount of money, and they're paying their loans down. So you're seeing, because the cost of interest, the carrying cost right now is so much higher than it was even a year ago. I would say at Penn Community, our lending appetite really has not changed. We're looking at loans. The opportunities might be, are a little bit more challenging to find. But we're talking to folks and we're looking at loan requests. And we're really sticking to our long-term vision of developing relationships and relationships that stay. So, I think, maybe some of our standards are a little bit different in the real estate arena, just because of what's happening in the real estate arena. But as far as C&I, we're looking for relationships.
It's certainly good news for those businesses that are still out there and looking to compete and grow and thrive, and certainly that's what the bank's here for. Now, I'm not gonna hide it. This is my favorite question here because I've gotten to work with both Ellen and Nicole in highlighting some of their customer success stories as part of our last year's impact report, and they were just tremendous to hear more about putting into action this relationship mindset and how that really impacts communities and individuals. So I'm excited about this, but we'll begin with Nicole. Can you share a success story of a business or an individual that you teamed up with for a commercial loan or for an advisory kind of partnership that yielded a really positive impact that might be relatable for someone out there taking a listen?
So this was, to think of one deal. I look at all my deals as success stories. We're at closings. It's my thing when I'm able to give a business the money that they need in order to get what they need. That to me is the most rewarding part of this job. But one of the deals that sort of, pops into my mind is a transaction that it was an SBA loan. And it was a deal that started about 2 years ago. So this is a local Bucks County company, has been in the community for a number of years, very, very well-established company, great reputation. And it was time for the owner to say goodbye. And it was a great situation where an employee of that business had the opportunity to buy the company. So like I said, this process started over 2 years ago. It took a really long time, as these types of transactions can take when you have a buyer and a seller of a very large company. But I was able to be with my client throughout the entire process. I was able to introduce them to people that could help them. I worked very, very closely with the buyers, my client. I worked very closely with the buyer's attorney, their accountant. The three of us were an integral part of really making this deal work. We just closed that deal in the summer, which was really exciting, really fun to do. And now the seller of that business can retire and enjoy his life. And my client, is now a business owner and doing what he loves and really can kind of take the business to the next level. We provided an SBA loan to him, which enabled him to buy the company. It was a great deal. I love doing stuff like that.
Ellen.
Okay. Yes. So recently we provided financing for one of my customers. They were buying an in-market competitor and needed a term loan. They put down a portion. They wanted to borrow the remainder of it to make the acquisition. And along with that, they also requested an increase in their line of credit so that they had enough availability, to accommodate the growth with this new company. The customer has a long, good financial performance history. They do operate in an industry that has narrow margins. So something we had to pay particular attention to. And at the time, they also had kind of a buildup in inventory that had some slow turnover. And I point that out because there were some factors we needed to really get under and understand. But it's a long-term relationship for the bank. We understand their business well. In the end, we were able to get them what they need with an appropriate structure. So I see it as a huge success story, for them being able to buy a competitor. They are also a little bit of a capital intensive business. So we constantly have equipment loans going out to them and paying off, as well as their working capital line of credit. So it definitely felt good to be able to help them grow in that way.
Certainly two success stories that are rooted in relationships. It sounds like, one, like Nicole said, a 2-year long process that needed a lot of partnership. And Ellen, as you just mentioned, a lot of variables in there that might, for other institutions, scare them away. And we're able to make it work on a continuing basis. So the power of relationships cuts through again. I'm really grateful that both of you took some time to talk about our commercial banking, commercial lending opportunities. Ellen Dodell and Nicole Boyden, thanks so much for joining me.
Thank you.
Thanks, Aaron. Thanks, everybody.
Thank you.
I hope you've enjoyed this episode of Mutual Growth, a podcast by Penn Community Bank. Be sure to subscribe and leave us a rating. And as always, keep up with the latest from Penn Community Bank by following us on Instagram, Facebook, and LinkedIn. For more information about this podcast, links to past episodes, or to learn more about Community First Banking, just visit penncommunitybank.com/podcast. Mutual Growth is the official podcast of Penn Community Bank, member FDIC, equal housing lender. It is produced for the benefit of current and prospective customers and partner organizations. This program is provided solely for educational and entertainment purposes. The information contained herein is based on sources believed to be reliable, but is not represented to be complete, and its accuracy is not guaranteed. The opinions, views, and estimates expressed are those of the presenters at the date of production and are subject to change without notice. Please email marketing@penncommunitybank.com regarding booking or repurposing any part of this podcast.